Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where this is the low and we're looking for new highs above at least 32k after a bigger three-wave structure is finished, a correction for this move towards the upside. That means we're then looking for either a wave 3 to the upside, which usually is the biggest, highest volume in a bigger impulse, and then a 1, 2, 3, or you're going to be looking for an A, B, and then a wave C to the upside. But if we zoom in, then this means that this has to be the end of a bigger impulsive structure 1, 2, 3, 4, 5 here, where if this is the end of a wave 5, it does look a little bit awkward, because over here we can count a nice 5-wave move in this move to the downside. 1, 2, 3, 4, 5, range for 2, range for 4, looks nice. But then this should have been the end of a wave 5 and not this low over here. If this was the end, then we want to see an impulsive structure to the upside, not this low being broken, which happened, so that is invalidated in that particular scenario, which means that this has to be then a wave 4 in a 1, 2, 3 sideways 4, and then a wave 5 towards the downside. But this wave 4 is very, very long compared to a very short wave 2. It's about 8 to 10 times longer in time compared to wave 2, which is a nice, lowering the probabilities. This is a wave 4, as usually the maximum time target for a wave 4 is like about 3 to 4 times longer than a wave 2. And you can see if you just look at the structure as well, it's a very long structure, so it's almost like its own thing instead of this being part of the impulse, so it doesn't look too nice. However, in the bullish scenario, this has to be the low, looking for upside. And this is where I spoke this morning with Coin as well in Discord. He asked me a question, hey, what are the probabilities of this like being a 1, 2, 3, 4, 5, right? Looking for upside. And that's a good question. So if we look at this wave 1 to the upside over here, for a wave 1, there's basically 3 ways to count a first wave to the upside. You have a regular impulse, 1, 2, 3, 4, 5. You have over here a potential diagonal structure, that's the second one, or this is a zigzag for then a bigger diagonal structure. Now let's go over all of these options. First of all, counting a regular impulse to the upside over here, moving to the 1 hour time frame, where in a regular impulse you want to see a wave 1, 2, 3, sideways 4, and a 5. 1 and 4 not allowed to overlap, which means if this is your wave 1, this cannot be your wave 4, because you can see there is overlap with your wave 1 in a potential 1, 2, 3, 4, and then eventually a 5 to the upside. So that means that your wave 4 has to be this structure over here, and then a 1, 2, 3, 4, and then a final wave 5 to the upside. Now you can see there's no overlap between the highs here and the lows here. Is this possible? Yes, it's not a very nice wave 3. As you can see, it's very difficult to count the subdegree over here of this wave 3. It's not a clean one at all, but okay, you know, we could like force an impulsive structure over here and then a 1, 2, 3, 4, 5. Nice. No, can we force it? Well, potentially. If we look at a diagonal over here, because of all the overlap that we see in this structure to the upside, then a little trick is to get the parallel channel, put it on the high of your wave 1 here, this first move to the upside, to the end of the move, so to the high of wave 5, and then to the low of your wave 2. So now over here, we are looking at this to be a 1, 2, then you have price action, and eventually the end of 5. And in a contracting diagonal, what you want to see is the lower trend line of the channel not to be hit. You want price to stay above the lower edge of the channel, because a contracting diagonal over here means this lower line should be converging to the upper trend line. But as you can see, the lower trend line of the channel has been hit, invalidating a contracting diagonal. Now, an expanding diagonal is always something we have to keep in mind. However, an expanding diagonal is very, very rare and therefore never preferred. The final option then is being a potential bigger diagonal, where this is an ABC to the upside, correction, and then another ABC to the upside for then a wave 1, 2, 3, 4, 5. So we're then looking for something like this. It is still on the cards, but the invalidation is very close. Most common target for wave 3 is between the 786 and the 886, and you can see that almost the 1-to-1 here has been hit, which would be the invalidation for a bigger contracting diagonal, because then wave 3 would be longer than wave 1, which is not allowed. Now, if we look at the bearish scenarios, then the first bearish scenario I'd like to show you is an ABC to the downside. So in this scenario, we have a 5-wave impulsive move, which ended over here. So not the low. the low over here is part of a corrective structure. No, wave 5 over here ends on the right, and this low is just a little lower than the low of 3. Then inside wave B, we're then looking for a 3-wave structure before then eventually another impulse to the downside. And when we think about probabilities, it's not necessarily Elliott Wave related, but we do have a double bottom here at 24.7k, which is like a magnet for price and increases probabilities for downside. But also Bybit already took this low over here, and many other charts, including the one I have over here, the Coinbase chart, did not yet take this low. And the fact that Bybit took this low based on statistics, there is a high probability that other charts will follow and eventually take this low before looking for further upside. Now if we zoom in to this wave B over here, then the scenario we're looking for is a WXY, and in Discord there's many people looking for 3-wave scenarios as well over here to the upside, like Jarvis, Perseo and Pahalia. And in this particular scenario I am personally looking for then if this is the low, right, WXY. W is then a flat in an ABC, which means this has to be a 5-wave structure. Then you have a wave X, and then we're looking for a wave Y, which then is a zigzag. So we have a flat, any correction, and a zigzag in a WXY, which is nice. Now in this scenario, the most common target for Y is between the 1 and the 1.236, which is where price is at the moment, as it is between 1k, 2k to 28.6k. Another extra confluence which price has hit at the moment is the low over here, and this is quite significant at least to know about, because you can see that on the weekly time frame we had this massive candle to the downside which created a very big gap. Now with a earlier weekly candle over here, this one, you can see that it partially got filled, but over here this retracement did not go all the way to this low, but now we have hit the low over here of the weekly candle. This whole gap is now filled, and that is at least something to know about. So if we then zoom in, you can see a rare target for wave Y is the 1.618, which is still a target, and between the 1.618 and the more common target for wave Y, which is over here, we do have a target box, which is an important resistance between 29.1k and 29.4k. So if price moves to the upside, that is the main area I will be looking for. Now a second scenario, if we zoom out, is this scenario over here, where in this particular scenario, this wave 5 is ending over here, and then a 1, 2, 3, 4, 5, but this is then a wave A, followed by a WXY in a wave B, and then a wave C to the downside. But now the WXY is a double zigzag. Zigzag in a wave W, so an ABC. Then we have an X, and then you'd be looking for another ABC in a wave Y. Doesn't really change the thing that we're looking for in the bearish scenario, which eventually of course is downside, maybe hitting that target box as well, as I just mentioned over here around 29k, right? But at least it's a scenario to keep in mind, where this is then the pivot of a wave 5. Now when we look at this psychology scenario, it might be in play, and one thing to keep in mind here is the volume as well that we had during the last move to the upside. So if we zoom in, you can see that price is making a higher high, but it does so on lower volume. That is very interesting and not too great for the bulls, right? Because you actually want to see volume increasing with new highs being made. So this increases the probabilities of eventually more downside to come. And this psychology scenario, as shown over the past week, is basically a very, very simple trend line here, where we break the trend line, maybe even backtest it, and then eventually move down. Now over here, price broke out, backtested trend line, moving towards the upside. How interesting would it be to then eventually move to the downside, where all the trend line breakout traders that went long in this area over here, they are in profit. So if they're, potentially smart, maybe a take profit one, stop loss break even, no financial advice. But something to keep in mind is that price could also do this and then trigger all the stop losses of the breakout traders. Now, if we look at the local scenario, we jump into the micro, then what happened over here? Well, first of all, as mentioned on Friday before the weekend, probabilities were higher to take this high, mainly because this structure over here, as explained, did not look impulsive. You couldn't really count a 5-wave regular impulse to the downside and also not a diagonal. Increasing probabilities, price would eventually take this high. But based on the local price action and especially the volume over here in this high and price moving down, we said, well, once the 0.5 got broken locally, make sure to check the stream on Friday for more details, but once the 0.5 here got broken, probabilities were higher. We were first going to move towards the downside, where we had this support resistance area, right? We had this white area on the chart over here, which was an interesting area as a support resistance flip, for then continuation to the upside, where we saw very, very locally some bullish divergences as well. So that's nice. Probabilities played out here to take the high. And then, of course, if price takes the high, it's all about how is it taking the high. Well, I mean, we got a big push to the upside. So, of course, there was no short opportunity here. And now I am basically, again, waiting for the next range, because after pushes like this, I just like to wait for a range to form, and then based on the range and the local price action, the waves, CVD divergences, well, we can again assess the probabilities for still a little bit more upside or downside to come. So if we then finally look at the probabilities of the different scenarios, then on the higher time frame here, the medium time frame, the bearish scenarios are still a higher probability, where we are looking for price to move towards the downside, and potentially this being an ABC to the downside. So we are then going to take the double bottom over here, as well as the Bybit wick, which already wicked this low over here. All the other charts will follow Bybit and take this low as well. Now on the lower time frame over here, a WXY is the highest probability, but it doesn't really change what we're looking for, because in this WXY it's a flat X double zigzag, and in the other WXY we're looking for a double zigzag. So both wave Y over here is a zigzag, as well as here we're looking for then a zigzag. So yeah, it doesn't really change the what we're looking for more locally. And on the micro, as explained, I'm looking for a range, and if price can move towards the upside still, then the first area of interest is this resistance area as explained. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.